Hello, this is Cesar. I'm a U.S. tax professional. I'm an enrolled agent and tax court practitioner. Today, I will be talking about Forex trading and how it relates to taxes. And also, actually, this video will talk more about non-tax stuff than tax stuff, but you know, um, I think it will be useful. This is a very niche thing. Many of my viewers might not care about Forex, might not have Forex, or might not be interested. So if you're one of those, skip the video, but maybe share it with somebody who you know that might be doing this kind of trading. I tried to make this video because I got an email from someone who saw my cryptocurrency video about using cryptocurrency losses to lower your taxes. And basically, he asked me, can I do the same for Forex losses? And the quick answer is yes. But the interesting part is that he had Forex losses because he invested with a company that was basically a scam. So he got scammed, unfortunately. And so his loss may actually be a theft loss, but the rules about theft losses are a little intricate, so we will have to like look at the specific circumstances. So it's more likely that it is a Forex loss, but it could also be a theft loss. So I thought that I would talk a little bit about this so that people might get a better understanding what this is. This is not tax advice. This is for education purposes only. If you want my advice, you can send me an email. I will show my email in a little bit. Also, my credentials. I am not an CFP, Certified Financial Planner, but I am an enrolled agent with the IRS. I'm a tax court practitioner. I have a bachelor in economics and business management, and I'm also a risk manager. And currency risk is something that we study as risk managers. So I am qualified to speak about this, even though I am not an expert in Forex trading, and I actually don't do it myself. So let's see here. Let's share the screen. Okay, so Forex might sound fancy, but it's basically when you are trading currencies. Your currency, well, any two currencies. So for example, when I was living in Guatemala and I received dollars from my family, and I went to somebody who traded in dollars, and I gave him a bill of $100, and he gave me whatever quetzales, whatever amount in quetzales. That was a Forex trading. We didn't have internet, we didn't have computers. That was a Forex trade. Okay. So it's nothing, spooky, but I have built this very simple Forex calculator. And give me 1 second here. Let me move this maybe out of the way here. So what makes Forex attractive and also dangerous is the amount of leverage you can have. Leverage means the amount of money you can borrow compared to the amount of money you put into the account. So for making the video, I did a little bit of research. It seems that there are some Forex accounts where you can leverage up to 400 to 1, meaning you can invest $1 and yet buy $400 worth of currencies. I mean, that's insane. But generally, from a US perspective, Forex trading usually allows you 50 to 1 leverage. 50 to 1 means you put $1, you can buy $50 worth. So basically, that's a lot of borrowing. So anyways, so it is 50 to 1. So if you put 1,000, you can buy 50,000. I am now in the Czech Republic, so let's say that I'm gonna trade Czech crowns. And let's say that when I make the first transaction, the Czech crown is at 21.7, meaning $1 can buy 21.7 crowns, or one Czech crown can buy 0.046 0, etc. dollars. So because I can buy $50,000 worth of Czech crowns, that is over $1 million, and that is just that amount in dollars times the amount in crowns. So I have over $1 million. I'm sorry, over 1 million Czech crowns. All right, then a little bit later, it could be the same day. Then I decide to sell the crowns back for dollars. So the amount of crowns is the same because nothing has changed. But let's say that at that point, the exchange rate is 21. That means that the Czech crown has appreciated against the dollar. And when I convert back my 1.085 million Czech crowns back to dollars, I don't get $50,000. I get 51.666. That is a gain on one transaction and possible in one day of more than $1,600. And then at that time, my account would have 2666 US dollars. So that is basically how Forex works. Okay. And let me see if this could be US Czech exchange rate. So let's see if this is possible. I'm gonna use the last, this is the last, the last day of Czech and US dollar trading. So let's say that I come in here and I buy at 11:46 p.m. last night at 21.77, right? So 21.77. So I get, that amount in Czech crowns. I apologize, let me, okay, currency. All right, no problem. All right, and then I go and I sell here at 21.61. All right, so the gain was not that large, but I still have 370. I mean, that is a rate of return of 37%. That's a lot, guys. I mean, 37%, and then I have, after one day of trading, only 1,370. If you can repeat this rate of return for 1 year, I mean, you will have a lot of money at the end of the year. Well, the problem here is I'm picking these numbers after these things already happened. I mean, if I knew at the beginning or last night that I could buy at 21.677 and sell at 21.61, of course I would have done it. But I'm doing this after it happened. So you cannot predict how it's going to happen. I mean, there are ways of estimating what the exchange rate is going to be, and based on that, you can make buying or selling decisions. But nobody can see the future. Okay, now, but let's say that for whatever reason you had to sell, and let's be pessimistic, and let's say that you had to sell here when the exchange rate was 21.82. Now you lost $100, so you lost 11%, and now you only have 185%. Okay, let's see if what the worst case scenario for this week. So let's say that you bought at 21.6. Okay, and you sold at 21.80. That's a week, because you when you buy Forex, you can sell it right away, or you can wait a week, a month, or hold it forever. Well, not forever. Eventually, you might have to sell, but okay. So you can see here that in about I don't know how much, Monday. on the. So in a matter of a day, you can also lose half your investment. All right, so it can be really, really good, or it can be really bad, and it is because of the leverage of 50 to 1. And the broker is not gonna wait. Let's make this worse. Let's say that it goes to 22 or 22.5. If it goes to 22.5, make it more fun. 22 point, well, actually, let me make it 22.60. So if the exchange rate goes up, meaning like the Czech crown depreciates by just one, whatever, you know what I mean, like by a little bit, then you end up losing money and your account balance is actually negative. The broker is not gonna wait until you have negative balance because they lend you $49,000. This will be their loss. They will sell when you are approaching zero. So they're probably gonna sell when you are at, let's see, yeah, when you cross certain threshold, probably here, where you already lost half of your account, you may send, they might send you a message saying you need to deposit more money, or they can use sell your position because they're not going to lose money. So that's what Forex is in a very simplified way. There are all more tools you can create where you can input the interest rate of every country, the import export flow, and that can help you estimate the exchange rate. But this is a very simple one. If you did not understand what I just entered here, you have no business trading Forex because you don't know what you're doing, and that's fine. You can learn how to do this stuff. I mean, you can go to Amazon and buy some books. I mean, Amazon in Germany. I buy books in English in German. It's okay. Forex trading. Okay. Forex trading. Let me see if there is some dummies. I like For Dummies book. Forex for Dummies. Yeah. Currency trading for dummies, 21 euros. I mean, you can learn this stuff. But you have to understand what you're doing before you get into it. And also, you should not invest money you cannot afford to lose. So, do not trade Forex if, for example, and this is my opinion, by the way, but I think any investment advisor will tell you the same thing. If you have 500 euros and you need 1,000 euros to pay the rent, don't trade Forex to try to make up the difference. Because just as you have a chance to make the 500 euros, you also have the chance of losing the 500 euros you have. So basically, poor people, and no offense if you're poor, we were all poor at some point, are the least likely candidates to be trading Forex because the amount of losses, the possibility of loss is high. So you should not be investing money you depend on anything, let alone even much less Forex. So that is Forex. Dun, 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 dun. So it appears, because I researched for this video, that I researched on YouTube, that there are a lot of people trying to sell Forex advice, Forex courses, Forex tips, Forex systems, Forex bots, Forex trading system. And they make promises like double your money in 3 weeks, 400% return per year, 1% return per day. And these things are in theory possible, but they are very hard to reach. I mean, you really have to basically know what's going to happen and get in and get out at the right time every day. And honestly, almost nobody can do this. And if these people could do that, I mean, if I figure out a way to do what I just did now of, making $370 by investing 1,000 every day, then I wouldn't need to work. I would just, do this every day, and every day I would make $300, and I would live off of that. And then actually it will compound, because every day I will be able to invest more and more. So 300 will turn into 600, 600 will turn into 12,000. I mean, I will be a millionaire in a matter of months. So these guys who are trying to sell courses, they will best invest their time and money and energy trading themselves. And honestly, no offense, guys, but if I find a way to do this, I will not share it. Maybe I will share it with my friends or with my family, but you know, um, I will have no reason to share this. And it's amazing what I found out, that that there are guys selling this on Instagram, on Twitter, on TikTok. And look, I myself in YouTube, I try to give you good information. I check first if what I'm saying checks out. Usually when I'm talking about taxes, uh, but you cannot learn investment um, in anything through a TikTok, through Twitter, through Instagram. You have to spend the time to learn it. I am a risk manager, like I said, and when I took the test, I had to study, so I bought a course from Kate Kaplan, and it was the basic course, so it cost like $600. But it was a lot. I mean, it was like 7 books, 6 or 7 books, and the stack was like this. And it took me like a year to study, and then I had to take the test. But even this course costs only like $600. I heard that there are people selling courses for like $2,000, $5,000 seminars, personal coaching. That is insane. I mean, like, if you really want to learn to trade Forex, put in the work, buy books, study finances, the all the micro and microeconomics. There are no shortcuts. I mean, you will be better off spending $1,000. Maybe you can become a risk manager too. So you can spend $1,000 in your education, and then do it than paying these guys $2,000, $5,000 for a Forex course. I mean, please don't do that. But if you have done it and you lost, do not be ashamed. Based on what I saw, they are getting all kinds of people. I mean, there are people who are successful business owners, very smart guys getting caught into this because it's very attractive. I mean, if somebody promises 400% return per year, I mean, no matter how incredible it seems, it's sexy. I mean, if I tell you that I could invest your money and get you 10 to 12% return per year, meaning, you give me 1,000 and I can get you $120, you're like, well, that's nothing. But that's the reality. Okay, like, I mean, real investment, usually the returns you can expect are, between 2% in a treasury bond, or 20 to 25% of the stock market on a good year. On average, the standard put, I believe that the average return is between 10 and 12% per year. And let me show you. If you think that is not sexy, I also prepared this other. So I already worked out the formulas here, but basically, with a rate of 12%, that would be a 1% per month. Investment for 30 years, that would be 360 months. If you invest $100 per month, you will end up with 350. So let's say if you want $500,000 when you retire, let's play with the numbers a little bit. Oh, sorry. Okay, so I got 150. So if you invest $150 per month, at 12% rate, which is close to the average of the stock market for the last, I don't know, 50 years or so, you will end up with $500,000. I mean, if you know, if this is a little higher, then you will, oh, wow, you will end up with a lot more. But if it's a little lower, then you got less. So like a very conservative rate for this, I mean, the time period is long. 10% is in my opinion, a realistic rate. So then you can use 10 and say, okay, let's see how much you need. Okay, maybe at that rate you might need a little bit more investing every year. So like, you can plan your investment like that. I mean, and you don't have to be basically be putting 225. I mean, maybe you can put 500 every 2 months or whatever. I mean, whatever it is, the time and the rate are your friends. If it is less than that, you can. Well, oh wow, look how much difference time makes. So basically, the sooner you start, the better, and obviously the more money you put in, the better. Let's say that you can put 1,000 per month. I mean, you will end up with over $2 million. But this is real, okay? Like, again, this is not investment advice. You can lose money almost anywhere, but this is better than what these guys are selling online. Promising you stuff that is not real. And if you need investment advice, then speak to a financial advisor. I cannot give you official advice because I'm not certified, but I do know about this through my tax education, my business education, and my risk management education. So I could maybe help you a little bit figure this out. And if you need a financial advisor, I could find one of my colleagues for you. But please don't invest in this thing. Now, if you did lose money, you can deduct it from your taxes. So let's say, for example, let's go back to let's say you lost, let's say you went all in, okay. Let's say you invested $10,000. Let's say that the loss was brutal. Let's say that it was 25. All right. Well, okay, maybe that's. Well, let's say you invested 100,000. Jesus. Let's make it less brutal here. Oh man. All right. So let's say that you invested 100,000. The exchange rate was this, and you lost $90,000. If you share this information with me, I am not allowed to share it with anybody. I can only use it to prepare your tax return, and that's it. So this could be, depending on the circumstances, foreign currency loss or a theft loss. And if you love this currency, if this happened to you, but you knew what you were doing and it was just a fluke, you are a millionaire, you will recover, but you still want to use this, that's fine. You can basically recover the position right away, because currencies are not securities, so they are not subject to the why sell rule. But you can use this to offset your taxes somewhere else. And depending on what other investments you have, I can tell you what you can do to use this loss in 2021. I haven't given my email. This is my email, cesar@cesartax.com. If you have any questions, send me an email. Hopefully, I don't hear from you because you lost money. Hopefully, maybe I hear from you because you made money. But if you lost money in Forex, you know, it can be good for your taxes. So send me an email and I'll try to help you out. Okay, if you are not into Forex, but you know somebody who is into Forex, please share the video so that they can benefit from this information and I can hopefully get another client. Thank you very much. Bye-bye.